Morning, this is Monday morning, and here I'm looking at BTC on the 1 week time frame. So let's do a little analysis and see what we are looking at. So already we see we have this pattern, already we know uptrend is when market is creating new higher highs and higher lows. Then downtrend is when price keep creating lower lows and lower highs. So this is an uptrend and this is for the downtrend. So we are going to look quickly at what we're looking at here. What does it look like BTC is doing on the 1 week time frame? This here I'm looking at clearly is an uptrend. So let's mark the major structure. This is the basic major structure. Let's take from this high to this higher low to a new higher high. Where is going to be our higher high? This place. Then our higher low, then our higher high. So now we'll be expecting what? A higher low, then a higher high. That's if the trend is going to continue. Well, here we are here. So I'm going to clean that. So we want to pay attention to just this swing structure here. Just this major swing structure. From this higher high to this higher low to this higher high. Break structure. This is where we call break of structure, when price push to break a previous high. Break of structure. That's in continuation of trend. So I'm going to mark here from this high straight to this body. That's my break of structure. Let me put that in XBOS. That's break of structure. Then I'm going to clean down. I'm going to remove this so that it will be clear. Then I want to mark out our higher low. Let me mark it out to the future. Then why this place should bound as my higher low is because we have a break of structure to the upside at the previous high. And where is going to be our current high? Is it here or is it here? It's going to be here because this is the highest point. It's the highest price BTC got to. Sorry. So I'm going to mark this out to the future. Okay. So if you look closely, if you're conversant with these terms called what? Liquidity sweep. Well, we have a liquidity sweep here. This liquidity sweep here. Clearing of liquidity, clearing of sell side liquidity, and I'm going to put it as X. Then here, let me mark here also. If price comes back to this place and take it out, then we continue as a break of structure. Here, also at this high, what do we see? We see also another liquidity sweep, buy side liquidity sweep, when price sweeps a high and change direction. Look at it. Let me put it there. Oh, sorry. Come on, this needs to be. Then let me make it X. I do mark my liquidity sweep as X. So what we are looking at now is from this range. With this high, what confirms this high? We say what confirms this low is because we have a break of structure from our recent higher high. Now what confirms this high? What give us confidence that this is the major high for this range? It's because we have a sweep of buy side liquidity, or more, you can some call it inducement to the downside. I'm going to mark this as, let me put it as inducements, IDM. So as price comes down, as price goes up, make another high. This is the minor structure. Comes down to take out this last low that made this high. We have you can call it, some call it market structure shift, some call it as the inducement that was taken out to confirm this high. So we're looking at this structure. Let me mark, for more understanding of minor structure, major structure. Let me mark the major structure. The major structure here is, I'll just pick from price came up, make this high, made this low, then made this new high. Now price has started coming down. This is the major structure. Then for the minor structure, let me start from this high here. Minor structure, you mark minor structure by candlestick patterns, pullbacks. So if you look here, we don't have any significant pullback. We go down, you see this candle here, so this candle's high, so this sweep, then we go up all the way to sweeping the high. We retraced a little bit, then we broke, confirmed break of structure. Then if you look closely, then we sweep this side, then we change direction. If you look closely, this candle's high was swept by this candle, so I'm going to mark it like this, like this. Then currently we are here. Let me change the color, let me make it somehow dark so that you'll be able to see it. So this is the minor structure. So looking at this minor structure and paying attention to the major structure, where its price mostly likely to react from the discount, right, since we are in an uptrend. So for you to understand that discount and premium, let me just explain it quickly. Discount and premium is when you have a price range, let's say from this low to this high. That range, let me remove some things. Take it off. So anything from this low to this high is a range, and 50% of that range is equilibrium, which is this orange line you're seeing. That's equilibrium. Then anything below equilibrium is discount, and anything above equilibrium is premium. So I'll take it off and I'll continue from there. So we have the mindset that we're in an uptrend and price is going to retrace down to discounts to reprice, cover inefficiency, tap into support or resistance that is going to push price higher. This is what I'm explaining. Let me move it here. So for an uptrend, price made a range. Price is going to retrace down to discounts, find some sort of support or close some inefficiencies, then react from there to continue up. Price is going to retrace down, cover inefficiency or tap into some sort of support or other block, breaker block, mitigation block, stuff like that to continue the trend. So that is trend following strategy. So here, what do we look at? Let me clean this so that this thing will be neat. Here we have a breaker block. And what is a breaker block? Let me explain it before I go into the major listing. So a breaker block is when, like, you have a downtrend going down. That's for a minor structure going down. Then we have a sweep of liquidity. Then price change. It did not respect the last place. Instead of going to come down, it just break it and go up. So ideally, price is supposed to come back and retest that place to continue going up. So this is what we are expecting here. This place, let me mark it out so that you'll be able to see it. This is for the bullish side. This other block here that failed is now the breaker block. So what are we looking at here? Let me clean this too so that it will be very neat. Make this to be thicker, make this to be thicker, and make this to be thicker. Yeah. So where is our breaker block here? If you look closely, you see this pattern here. Let me start from this high. Price came down, and so retrace up a little bit, then sweep liquidity, then push to the upside. So let me just take it like this. So now price is trying to come down. We are mostly likely to see a reaction from this candle. This candle is this is the weekly PDRA. This black candle is what some pick the green candle, but me, I'll pick this black candle and I'll mark it out into the future. So what I'm going to do now is to wait for price to come down to this level. This POI is located at the discount area of this price range, from this low to this high. This POI, this PDRA, which is a breaker block, is located, and it's also aligned. Look again, it's also aligned with a fair value gap. This is the fair value gap here from this candle. Make it a dotted line. So this candle, that is the fair value gap. That's an inefficiency in price when price has there are only buyers in this place that make price to push like this. So you see this gap here, we call it the FVG, fair value gap. So what I want to do now, because I will not just take this trade from here, I will wait for price to come down into this PY, and I'll go to I'm on the weekly time frame. I'll go to the daily time frame, then I'll go down to the 4-hour time frame to wait for a pattern like this. I'll wait for price coming down, maybe sweep liquidity, change direction, then as it's retracing back, I'm going to find somewhere to enter, then I'll go for a long. That's the lower time frame confirmation. So this is the plan. The plan is to wait for price to come to this PY and go to the lower time frame and closely watch how price is going to react from there. That's if we are going to continue this uptrend. Then for me also, this price coming down here, I also see an opportunity to sell from there. See price coming down all the way. So now let me just switch to the 4-hour time frame, or no, let me switch to the daily time frame. So if you look closely at the daily time frame, where we have this at the daily time frame here, I'll call here to be I'll change here to be my change of character, because look, paying attention to the minor structure, that's the change of character. Then after change of character, what did price do? After change of character, since we have the expectation that price is coming here, if you look closely, you're going to see after this change of character here, this candle, this black candle closed below it, so it's confirmed that this is the break, change of character. Then what happened next? Price retraced up, not just retraced up, it retraced up and swept a what would I call this place? It just swept this high a little bit, then continue breaking structure to the downside. That's when you study what is it called? When you study classic market structure and market structure using inducements, that's when you learn how to mark out structure correctly. So peradventure, if price ever comes back up to this side, I'm going to go for a sell to push it down to this level, or at least come into that inefficiency. So here I will just wait, and where will I be willing to enter for that sell? Probably on this candle. You see this candle that has the inefficiency just above it, this candle. I'm going to just pick it up, mark it out. So that's like a lower high for the downtrend. That's a lower high for a downtrend, and most likely this is going to serve as inducement. This is going to serve as liquidity to fuel the down move. And looking at probability, price might also come here and give us a sweep of liquidity, then come down. So, but I will stick to the plan. This is my for that sell. Look at the structure. You see the structure from this low to this high down here. We have not had any confirmed low yet, because price is just continuing. This leg of price is still there. We don't have any like, what would I call it? We don't have any sweep of buy side liquidity. We just have continuation. It might continue to this place. If it continues to this place, then comes back here, I'm not going to enter for that sale. But before it gets to this place, if it comes back here, I'm going to sell it to this place. That is if it continues, if it goes up from here. But if it comes down here, I'm going to cancel the trade. The big plan and the small plan. Big plan is to enter from this breaker block, watch price closely to find a place to enter for a buy. And the minor plan, the smaller plan, that's the most current plan, is that if peradventure price comes back up to this 112k, I'm going to sell it down to probably 90k. Yes, 90k is fair enough. That's like even the middle of this inefficiency. So I think that's all. If you are still a beginner, you have to, I would recommend you to go to www.babypips.com. That's where you learn from the basics, but that is not going to teach you everything. You're still going to learn from other experienced traders like me too. I'm learning from other experienced traders. I read, I take time to do other things to enable me master this skill. If you look at this structure here, you see that, let me throw your mind to something. If you come down to this daily time frame, you see that price closes above this. But if you go back to the weekly time frame, you see that it's just a sweep. It's not a confirmed peak of structure. This is where the peak of structure actually happened, when this candle pushed against it and closed above it. So that's the plan. That's the thing. Some traders will be willing to enter at the 50% of this, but me, I'll just wait to observe how price reacts in this inefficiency and on this breaker block. Then any buy I'm going to be taking, I'm going to be targeting maybe this high to take partials, and some here, and some I'll just take it higher, maybe to 130 or same at that, just to touch this liquidity here, this external liquidity. So that's that for now.